Hello, good afternoon everyone. Welcome to today's live trading hour brought to you by the Live Trade Room. So look, what we're looking to do during the session is to, I suppose, go through the process in which we prepare for the opportunities which may lie ahead. We'll review our trade plan going into the day's trading. We'll have a look at some of the news events that are likely to impact some of our trading decision making. We'll look at what opportunities we're in, where the opportunities lie, and basically prepare for the US trading session. So without further ado then, let's get straight into it. We'll start, as we always do, with our risk warning. Just please take a brief moment to familiarize yourself with our risk warning currently up on screen. David, good afternoon. I see your comments there. I'll come back to them in just a moment if that's okay. I think a couple of interesting little comments there, so just give me a couple of minutes. So the first thing really when we trade the financial markets, we want to know if there's any major news events that are likely to impact our trading. So for that, we'll have a look at the news. We'll see where we're at, and there's a couple of important issues today, being the 31st of March, firstly being the end of the month. What we often find is we can experience a little bit of consolidation or a little bit of profit taking, where there's a bit of reconciliation towards the end of the trading month. You can imagine if you had monthly targets and you are wanting to sort of close out positions, you're not wanting to carry some trades across to the next month. You may decide to make some decisions, take profits at certain levels. So you can often get a sort of a strange trading day. Not necessarily full of volatility and direction and clarity and momentum and all these things that we love when we trade. It can often be a little bit of a wishy-washy type of day. So that's the first thing. Secondly, you can see up on screen there today, the 31st of May, we've got a bank holiday in the UK and the US, so we have the financial sectors taking a day off. So you literally don't have that volatility in the markets that you would normally experience. So for those two reasons, we can expect we probably just need to err on the side of caution. It's okay getting into trades. What you'd want to do is kind of lower your expectations, maybe give slightly bigger stop losses to avoid any kind of meandering price action. So yeah, it can definitely be a challenging trading day, and as we can see from a news sort of data-driven perspective, we don't really have any significant news to have to contend with for the trading session. So on that note, let's have a look at our trade plan. Let's have a look at some of the trades that we're in. And we'll have a little review of these markets. So there's a little bit of softening in our pound yen trade and our euro yen trade, and in the dollar yen as well. You can see it's just coming off the highs. Now, we've had some interesting moves in some of these towards the end of last week. Clearly defined level of resistance where we were able to close above that level. We saw some acceleration to the upside, which subsequently has reversed, probably as a result of the fact that we're closing out the calendar month with a bank holiday being today. So not ultimately too surprised really. Our bias is still very much to the upside. So it's a case of how much pullback are we going to see in these markets? That's kind of the big question really right now. What might be useful is to just see where we're at with these markets. Pure indecision for the euro dollar. Same situation, indecision for the pound dollar. Little bit of yen strength creeping in across the board, and we can see it against the pound, and also where's my euro yen trade gone? Okay, here it is. So we've got a bit of softening across these this yen. The yen weakness trade was probably the trade of the week last week, all things considered. So we were able to get into the pound yen, the euro yen, and we kind of missed the opportunity really in the dollar yen, although what we've been a bit nervous about recently is kind of over correlating trades, so getting into too many maybe dollar trades or pound trades or yen trades. So although they were sort of viable opportunities, so clearly a bit of yen strength creeping in today. We don't believe that there's anything structural to support the yen strength trade, so it's a case of a bit of profit taking, and what we're looking for is the next leg to the upside. So we'll see how we get on with that and see when that will occur, more importantly. So a bit of dollar mild strength against the Swiss franc, nothing really happening against the CAD, and now we're just seeing a bit of dollar weakness against the Aussie and you could argue the New Zealand. We can't detract from the fact that when we look at these markets, we're broadly trading a lot of consolidation. So the good news about consolidation, those of you that are familiar with technical analysis and technically trading charts, is that all trends start from consolidation generally. So if we just experience like a clearly defined trend to the upside, what you'll often find at the origin of that is markets that can often move like in this fashion. So you're getting the consolidation in there, and then you get the breakout trade to the upside, and then you get the trend starting to kick in. So go through other previous charts and look at what happens at the beginning of trends, and also at the top of trends. You often see a leveling out, a consolidation up at the top end of trades before they all start to reverse. So that's the good news. It's not great right now from an opportunity perspective. With these sideways moving markets, they're a little bit more annoying and frustrating than we would like them to be, but if we can be patient, we'll I'm sure catch some of the moves when they occur. Like a good example is the euro pound to the downside. We need this market to just roll lower. It's being a little bit of resilient. It just shows you how important these levels of support and resistance are when we trade. The pound yen, a bit of softening. We're still in this market to the upside, and we're going to continue to hold on to this trade, although it's currently pulling back. We don't feel any need to really panic just yet. If you spoke to us on Friday, we'd expect a little bit of softening as we closed out the month, and that's exactly what we're seeing. So a little bit of patience there. A bit of positivity in gold for a period today. Like the gold market is it's a hedge against inflation. So there is this inflation story that's likely to be quite destructive for markets over the coming months, and we're very much likely to see gold over time push higher. And what we would like to see is a bit of a correction, a bit of a pullback to get in at a lower price, slightly better price. Crude oil, it's taking a bit of a jump to the upside. It's probably one of the only markets that's probably doing that right now. We've got this high just sitting just above that level, so we can probably expect further upside in crude oil, so we can have a look at that for sure. Right, regarding the global indice markets, we've got the S&P, NASDAQ, Dow Jones, the FTSE, the DAX, and you could argue the Nikkei as well, not really doing an awful lot from an opportunity perspective. A little bit of a bounce back in Bitcoin, so we're not blessed with huge opportunities today. Perhaps looking at some further yen strength might be an option, but just know it's a counter trend move, so you'd want to be pretty sharp with booking in profit and mitigating risk. We're currently in those trades to the upside, so we want to give them a bit of room to reject these lows. That's what we want to see happen. We want to see these lows here rejected, which is kind of what we're seeing. So it's kind of fitting in with our analysis. We want to see these lows, sort of hold up and create a bit of indecision in the minds of those sellers in these markets. There's the highs. That's what we anticipate, making new highs in the not too distant future. So we'll come back and we'll have a look at all of these. Most of the dollar pairs are not in a great position. There's probably a technical sell trade, but like I said, we're actually looking for the yen weakness trade over the course of this week as well. So let's have a look at a few of your questions there. Okay, so David, good afternoon. Hope you had a good weekend. So obviously was killing and doing absolutely well on the 5-minute chart, but now at the ripe old age of 23, I'm tired, want to move to the 1 hour for executing around a 25 pip stop. Now my problem is, for example, a 25 pip stop on EU. How do I translate that to a stop on like gold? Yeah, or the pound dollar. Yeah, quite a few little questions in there actually. On the 5-minute chart, I had somewhere between 5 and 12 pips stop. I'll translate it even, yeah, like a FTSE. We get this question all the time in terms of time frames. Which time frames should we be trading? How big should our stop loss? And you are doing some of the things that we teach our traders straight away not to do. So the first thing is try to have an open mind about time frames. Time frames don't matter, and that sounds really counterintuitive. I appreciate that. 1 hour time frames are really great for like a swing type trade where we're going to be in it for a day or two. It gives you a bit of perspective. You'll be able to see what's going on. And then in really volatile periods, a 5-minute chart might be necessary to avoid missing the opportunity to get in at the earliest possible time. So the first thing we want to teach traders is to try and adopt a multi-time frame approach to trading markets, because you get your big picture view, you get your direction and everything from the daily time frame, and then you're just going down the time frames suitable to the entry and the opportunity and how it's presented itself. So getting hung up on one particular time frame is probably not a great idea. Having a bit of mental dexterity and flexibility in the way that you approach these markets is a better approach. It takes a bit of time. It takes a bit. We appreciate it takes a bit of time to get used to it, but it is what the vast majority of profitable traders, they adopt that multi-time frame view of these markets, And even we spend time once a month going through weekly and monthly levels and seeing what the overall, what the investment community are involved in. That's quite an interesting conversation. And so we carry a direction on the bigger time frames, and we carry that down through the smaller time frame. So if you said to me, does it matter whether I trade 5 minute, or 15 minute, or 1 hour? The answer is not really. It's very much suitable to the type of opportunity and the way that market ebbs and flows. Some of them are very, very volatile. You'll probably want to use a smaller time frame to be able to pinpoint that entry. Other times they're like very, very slow moving, and you can probably look at consolidation on an hourly time frame and see price bands where if prices break above that price, it's the price at which you enter is really what's important. And of course, the bigger time frame as well. This is another thing about things like 5 minute charts. Nowadays, there's so many trading bots when you trade these financial markets, and they can execute trades a lot quicker than you or I can. So we've got, it's a very fast way of getting in and out, but we're slightly disadvantaged, David. So we're not really able to execute those trades as quickly as we're able to do so. We can't execute trades faster than your trading bots. So that puts us at a disadvantage, but it also creates a lot of what we call intraday volatility, which is sort of senseless swings and wild swings. And that's why if you're saying you're using a one-size-fits-all approach to stop losses, i.e. 5 pips and 12 pips, we find that having a one-size-fits-all approach doesn't work. It doesn't work consistently. I understand why people do it, because it allows you to be somewhat disciplined, and you can learn very quickly how much you're exposing in that trade, and some of the parameters don't shift. But again, like what we spend our time focusing traders is how to trade the financial markets like your institutions do. And they don't have such a rigid view to trading. They've got a more kind of holistic view where they can change their risk profile depending on the opportunity. They can, again, do multi-time frame analysis. They can think about these markets from a, what's driving them perspective. So they'll be looking to get on side with the fundamentals, which is, again, these are all the things that we do day in, day out, is to try and put ourselves on the right side of the market. Go with the commitment of others, not go against it. All your trading bots will be going against the flow of a market, and it does create the volatility. And there is retail traders, and professional traders jumping in and out, highs and lows, and there's no necessarily right or wrong way to trade financial markets. I suppose proof is in the pudding over time. To scalp markets or to sell the highs and buy the lows, it's a tough place to be. It gets slightly easier if you've got more experience. When you're starting out, it's quite a difficult environment. So I suppose the only advice that certainly personally I'd have for you, David, is to is to just sort of have a little think about perhaps taking that bigger time frame and trying to, for markets and trades to make a little bit more sense perhaps. So for example, we never have a standard stop loss to any market, whether it's gold, whether it's the euro dollar, the pound dollar, the oil markets, the S&P. It's always relevant to the technical setup, so a technical high. So like for example, if we were getting into this sell here, if we were selling at this point to the downside, we'd be looking at this high maybe as a potential stop loss, or maybe even this level up here. So we're using technical levels as stop losses, and like this stop loss here might be might be at 20 pips, and this stop loss here might be at 40 pips. I don't know, whatever it works out as. So can you see how we can make decisions based on daily high? That gives us a little snapshot lower. We might get a 20, 30, 40 pip move today and book in profit down at these lower levels. Or we might sort of say this is a bit more structural. We'll have a 40 pip stop loss. We think there's plenty more scope for this market to push down to these levels. It's all about your analysis. But we use technical levels. We let the markets determine exactly where those levels lie. And so this is a really good example. You've got these technical highs just sitting in here. You could literally choose any one of these three. Because it's a bit of a reversal trading day, you might want to go a little bit tighter and look to see if you can make 20, 30, 40 pips in today's market. Will we see that? There's a bit of a question mark over it. Look at that floors being created there. And we haven't seen the flush through, which you would expect. Maybe it'll still come. But so all of these things just formulate your trading idea, your trading approach, and you're able to execute what your approach is. Hello, JJ. Good afternoon. Maybe please have your insight on upcoming CAD news. Yeah, upcoming in the next 30 minutes. And the Aussie dollar news for tomorrow as well. Yeah, absolutely. Let's go in and we'll have a quick look at that. Yeah, so I would be charting the monthly, weekly, daily and 1 hour, but you mean it wouldn't be enough to trade the markets and you'd miss some? Like, I suppose an easy way to sort of try and address all of this is, do you have a trading plan? Or do you hit your trading desks and look at the charts and go, oh, I'm gonna buy that, I'm gonna sell that? Because if you have a trading plan, then you build that trading plan based on bigger time frames. It is literally what we spend half an hour every evening doing, is to look at the bigger time frames and say, right, well, tomorrow, if this market acts as we expect it to and moves in this direction, this is a market we want to be buying, or this is a market we want to be selling. So everything we do is kind of planned or predetermined. That might be a good way to kind of, improve your performance, perhaps. Yeah, so let's have a look at this CAD news then. I know it's very mild in its nature, JJ, and we touched upon it just briefly. That there's nothing of any major. I assume you're referring to this news here, but look at the impact of these news events are quite important. What is interesting is the red events. So these are your potentially major market moves. So the RBA, for example, tomorrow, OPEC. We've got OPEC all day tomorrow, which is the other reason why it's probably not a great idea to be jumping into crude oil necessarily today. We shall see how that plays out tomorrow. The manufacturing, how the manufacturing sectors are performing in the relevant countries all formulates a part. GDP out of the Australian dollar. I don't know if that's the event that you're referring to. There's a lot of really minor. Oh, you're referring to the RBA, I guess. Oh, really? Okay. TradingView ranked it moderate news. Yeah, it's not. It never really is moderate news. I mean, a sure way to just determine that, and we'll have a look at it at 1:30 actually. So if you bear with us, we'll go into it. But this news will be released. In fact, I'll put on our Squawk service as well, so we'll get a little update on the Canadian news event. But the big important events are very much around, your major economic data releases, and like the current account, it's of no real consequence are these price index figures? Are these inflationary based figures? Are they? Yeah, the change in the price of goods and sold. Okay, so actually greater than forecast. Yeah, so these are your producer prices. So, I mean, it is a monthly figure, so we can expect. In fact, look at the previous figures. Like these are lower than the previous monthly figures on inflation. So the reason why it might be a more moderate event is that impact that inflation is having on central bank rate decisions and tapering. And we've already seen the BOC taper by their bond buying program by 25%. So the first major central bank to start to taper in that way. All eyes are really on the Fed to see if they follow suit. So yeah, inflation is quite an important event. It's very rarely an event for the Canadian dollar that impacts it to any great extent. What's far more important for the Canadian dollar is actually something like the oil markets. And tomorrow we've got OPEC. So if you can imagine, if the price of oil increases, that's better for an exporting economy like Canada. So it'll perform better if they're able to attain better prices for a major export like crude oil. We'll keep an eye. The BOC have already started the tapering process, and with a view of probably increasing interest rates sooner rather than later. So it really depends whether the news release is in line with expectations, because markets pretty much price themselves in based on the forecasts. So they're priced in. And this is why when we have a major news event, if we get a deviation on that number, it creates a lot of volatility, because these markets are a discounting mechanism. So they'll discount the price straight away because they're slightly offside with their view in terms of the economic data release. So so this is why when we look at these figures, what we're actually looking for is a deviation. The market is looking at all the stats, and this is consensus as well. These 0.8 and the 1.7 figures, they're in line with consensus. So if the market has a general consensus on something, then it's pretty calm. It's when that consensus changes and actually it creates an imbalance, then you get those corrections in price. Does that make sense? But I don't actually think I've ever paid too much attention to this Canadian figure. We'll see. We could have a look at the dollar CAD at 130. So I'll tell you, that's exactly what we'll do. We'll have a look at that at 130, and we'll see whether there's any movement whatsoever from the CAD. And if I play we'll get a little bit of an update as well, JJ. Oh, it's off air. Okay, let me just refresh that. Okay, sorry. Yeah, this very well may be due to the Memorial Day bank holiday. Hang on, let me see. There will be no European or US squawk sessions on Monday the 31st due to the UK and the US bank holidays. Okay, so we don't have the squawk feed today. So does all that make sense? I hope it does. Yeah, the Aussie news for tomorrow, the RBA, very much expected to keep rates at 0.1. So we're in this, prolonged low rates for longer type environment. So look, we're at historic lows, which is sort of no major surprise, but there'll be a rebalancing. There'll be this drive to start increasing rates and try to create a bit of a more of a normal environment, and that would be generally pushing rates higher. And I suppose all eyes are really on the Fed to lead the way with forward guidance and not creating a global mess along the way. So we're entering very, very important period for these financial markets, likely to give us some fantastic opportunities, but the rule book has almost gone out the window. So we're in slightly uncharted territories. With the amount of dollars the US have been printing over the last 12, 14, 15 months has been exponential. The greatest in history, and they've done a decent job at trying to steady the ship, but now there's this concern on the inflation side, and it's a bit of a worry for these financial markets. If prices go up, the central banks can increase interest rates to kind of offset, take a bit of the heat out of the economy. The problem with that is everyone's debt starts to increase, the repayments start to increase, and the debt burden can get excessive. So then do we have a debt-driven economic crisis following? So that's one of the concerns. I suppose these different news, they'll probably have a slightly different bias on some of these news events, I would imagine. Do you expect the dollar to continue its weakness? I suppose this is where we let the markets decide. So what's going to determine the fate of the dollar is whether these indice markets, the US indice markets, whether they push higher or whether they roll lower. So if they push higher, we'd expect the dollar weakness trade to continue. If they start rolling over to the downside, we'll expect some capital flooding into the dollar as that flight to safety type trade. So really, it's more to do with the markets that are leading the show are the US indice markets. So that's where we'll get our cue from. So if we see a lot of selling, indice selling, we'll actually be looking at the at the US dollar for some US dollar buying opportunities. So maybe roll over to the downside against the euro. This is where a bit of technical analysis comes in. If we get an environment where there's some dollar strength and we've got all of this consolidation just building up nicely in here, and we get this market breaking down this level, there's your high probability dollar strength trade, as long as the indice markets are kind of following suit. So it can all come together, but because we've got indecisive indice markets, we don't really have decisive dollar markets at the moment either. So it's clearly taking a little bit of a breather, and it has done for the last 3 weeks perhaps. So current account, seems like it could have a good effect on the CAD. I would just question, why would it have a good impact on the Canadian dollar? It's an accountancy number, and we shall see. We've never really been impacted by it previously, or to any massive extent. I see what you mean about the improvement. So going from minus 7.3 billion to plus 2.4 billion. We're talking about relatively small amounts here, but yeah, a big improvement. So there might be very, very mild Canadian strength off the back of it. Yeah, you were surprised the effect the New Zealand news had. You missed out on the New Zealand news. Yeah, just asking. Yeah, no problem. Are you talking about the New Zealand news from last week, I guess, were you? So you were looking at last week's RBNZ. They still kept rates at 0.25. Mild positivity for the New Zealand dollar. The problem we've got with the New Zealand dollar is mild upside, but broadly speaking, kind of a bit of a horrible market. Last week, so it's the RBNZ. So, broadly positive for the New Zealand dollar, but we're still in this zone, and we keep getting these rejections of these levels. So what that allows us to do is to plan in advance of a confirmed break above 72.89 is our green light to the upside, and it looks like we're getting that little build up to that level. But we can't detract from the sense that we're largely in consolidation from 71.48 to 72.85. So we're only really 140 pips range bound since we can even go back to sort of mid-April. So we're not too quick to be getting into trades like this. The volatility is kind of spread. There's a couple of sort of major sells within this little zone, and there's a few sort of major buys within this zone as well. So they're kind of cancelling each other out, but your bias absolutely would be to the upside. So I'd agree with that, but we just need price action to follow suit now, and if that's the case, then above this 72.85 level is your high probability buy trade in a market like this. So look, we've got this Canadian dollar news. It is inflation based. There's a lot of talk about inflation at the moment in these markets. So we'll prepare for that opportunity. But what I'm going to suggest is that, and we'll do a quick analysis right now. Sideways euro dollar, sideways pound dollar, mild yen strength actually across the board. Let me just double check. Yeah, it's kind of unraveling a little bit. Still a bit of a question mark. All of these dollar pairs, there's probably an argument to suggest buying the Aussie dollar, but again, most of the trading in this market is within a very, very tight range, and we're not fans of trading consolidation. We like breakout trades, either above or below. We don't care which way it goes. We don't have all of our hopes and dreams in any particular market. If it acts in a way, so like this would be a legitimate buy trade, whether you booked in profit or you broke even on the trade, but effectively it's a reversal, and you get those reversal trades which don't really give you a great opportunity. But don't let that detract from the genuine breakout trade in these markets. And it'll probably happen when you're looking at other markets or you're distracted elsewhere. So keep an eye out for these levels. You see, there's potential buying opportunities in the Aussie and in New Zealand. They're just not great quality trades. So probably medium probability at best, maybe even medium to low. And plus it's a bank holiday, so it's never really a period where we want to go, be too aggressive with all of this. Yeah, your hopes and dreams, I know. We always use this phrase, is that the outcome of the next trade is irrelevant, and what that does is should hopefully remove a bit of the stress and the strain of making decisions from your shoulders. If you know it's irrelevant and it's the performance of that trade, and if you control your risk, and if you're wrong, you take a 1% loss, and if you're right, you take a 3, 4, 5% winner, and you do your analysis and you get into trades for the right reasons, then it's kind of pressure off, and that's a place which is a lovely place to be when you're trading. We have so many people load up on trade size. They literally have an inbuilt belief that this market is going to be a winner, and more often than not, that fails to be the case. So for us, let's not get into that conversation. The outcome of the next trade is irrelevant, because we're interested in the performance of the next 100 trades, not the next one or the next two, because they could both be losing trades. We can get 5, 6, 7 back-to-back losing trades. But because we have a positive risk reward when we trade, we go through periods like that. I think every profitable trader does. But we don't beat ourselves up about it. We just accept that that's the market condition and just look for that next 4-5% winner. And it'll come, and it always has come. This year is certainly a bit more challenging, but probably for other reasons, perhaps outside of these markets as well, with the lockdown and family and all sorts of, the environment in which we're trading is not great. But you've got to take that on the chin as well, really, to be honest. So yeah, remove pressure and stress from trading decisions and just try to make consistent decisions. Be disciplined with your capital, and days like today, try to be patient. If you're too aggressive, the market wins probably today. That's the reality of it. And those are the pillars we teach traders every day is be consistent in what you do, be disciplined with your capital, and be patient. There's market conditions that are not great for trading, like now. So we can tell our traders that in advance. So they're not, if they get into a trade, they're not looking to blow the doors off the trade. So they're not looking for a massive out and out winner. They're actually being quite reasonable and saying, well, if I can make 1 or 2%, I'll be delighted, and that will be a good trading day. And then tomorrow we might get lots of volatility, lots of opportunity, and we might look to fill our boots. So I'm quite conscious of using a lot of these little sayings, so apologies for that. Often trading and educating people about trading is all about analogies. It's just trying to make people just see things in perhaps a slightly different way. So I do apologize. But yeah, take the stress out of your decision making, and then you can see, you can sort out the rough from the smooth. And today, we'll have a look at this Canadian dollar. We'll just see if there's any major news event. I'd be surprised if there was much of a move. But with these markets, it's so hard to know. So we'll just have a look at it on the 15-minute. We'll just see. This is a small-term time frame. Let's go a bit higher, and we'll just see. So clearly, we're creating this consolidation in this market. So I'd hope you'd agree. The vast majority of price action from the 10th of May to the 31st of May, so we're talking about 3 weeks, has been purely sideways moving. So that's the market condition in which we're trading. A confirmed breakout of this level to the upside above the 21.39, or to the downside below the 120.27. Yeah, 21.39. Yeah, so we're talking about 100 pip range in 3 days. Like that's that's very low, very low to have so much price action and volatility in this trade. You'd be sort of bored to death with a market like this if you were looking to get in and out. So there's our trade plan for you, JJ. Is a break below the 20.27. Or we can be a little bit more accurate with that. The 2012. So the 120.12 level is your green light for this market to continue further to the downside. Except the problem that we normally get is that when we get the breakout trade to the downside, and that was nice and clean, you get some consolidation, and what you often get, I'm sure you're familiar, is the little bounce to the upside. So if this market bounced to this, would you be surprised? No, we wouldn't. We'd look at this level in here as a strong level of resistance as prices push higher, and there's your high probability sell trade. So these are the things that we go through with our traders every single day, and you know, do have a look at our website as well, because we can offer you this mentorship with us at the Live Trade Room for just $29 a month, and there's even a $15 package as well. We've got very, very low fees because we trade these markets live every single day, and we don't need to charge. We could easily charge, I don't know, you know, these 2, 3, 4, 5 grand packages that many other educators will kind of suck you in and ask you to fork out for. There's no need to do that anymore. So and there's an awful lot of content as well online that does nothing but confuse traders, and we have traders bring, you know, all sorts of videos to us all the time, and 95% of it is a complete and utter load of rubbish, unverifiable rubbish. And just be mindful of that, because it doesn't help anybody, does it? Yeah, listen, my pleasure, JJ. And look, you can join us live here every single day at 12:30. So delighted to have you join us. I'm just looking at this dollar trade, this CAD dollar. I will let you go because we've got another trading session in just a moment. But on the daily time frame, there's such little volatility from high to low. We've got the 120.84, the 120. So we're talking about 24 pips is the range for the day, which is beyond nothing. So when we do our analysis in this, we're in a very, very tight little range here, and we'll even go into the minute time frame so you can see what impact the news event has had over the last 3 minutes. Let's see what that news event is. Yeah, it's the 31st, isn't it? So this is what we have, the IPPI monthly number, and it's important to take on board the time frame as well, and the RMPI. So the current account came in less than expected, but still a significant improvement. The IPPI, which again is a data figure that I don't recall referencing for quite some time, 0.8. So we've got an uptick on the inflation situation with the IPPI, which is actual greater than forecast, monthly release. So about 30 days after the month ends. Change in the price of goods and services sold by manufacturers. So that's a manufacturing figure. And this one is the change in prices of raw materials purchased by manufacturers. So this is very much a manufacturing inflation news event. So basically all it's saying is that the inflation is going up on the prices. So the prices at which manufacturers are selling items is going up. And interestingly enough, the price of the raw materials purchased by these manufacturers are going down. So that's an interesting development, because manufacturers have been saying for quite a while, you know, the prices of everything are going through the roof. But in Canada, this is not the case. So this is a strange, and you can see how erratic the figure is anyway. But so people are being charged more, but the cost of the materials themselves is actually going down by a significant number. So the difficulty becomes is, how do you interpret that? Is that good for the Canadian dollar, or is that bad for the Canadian dollar? Should it be good for the Canadian economy that the manufacturing prices are going up and the raw materials that they're paying for are going down? So that means more profit for manufacturing. So there you go. You know, how do you trade that? I mean, I suppose the simple conclusion really to trade it is to trade a price action, which is basically what we do. So if we just take a step back, just regarding so what we can do when we do our analysis, this market is pushing clearly to the downside, so it's all about dollar strength. Bit of a question mark over the US dollar, so we're talking about dollar strength. The crude oil markets are pushing to the upside, so that adds a little bit more momentum. So what would we like to see happen? We'd like to see a market break out of this little tight range in here and break out to the downside. So the question is now, at what price would we be looking to get in? And it would be a close in and around the 120.40, something like that. A close below that level would give us a green light to take this price to the downside. So for us, and this is only for us, and I appreciate there's a little bit of a handle in here, you'd be looking at a microscope and looking to get that little micro trade off, which is fine, but we would look to avoid the potential for, sorry, let me zoom in as much as I can. So this is strong support and this is strong resistance, and we'd be looking to avoid selling above support. So that's what we'd be concerned about. So the breakout trade is different because we clear the support levels, if that makes sense. I hope it does. Okay guys, so we might have to pack up there. So really, I suppose an interesting news event for the Canadian economy, but doesn't really give us much to work with, really. My pleasure, JJ. I hope you found that useful. Yeah, you subscribed to it. Brilliant. So look, do feel free to subscribe. We're going to be posting these little sort of market update videos as well, as often as required. So it'll just give you a little bit of a snapshot. So subscribe to our channel. Give us thumbs up if you can. And we'll see you again tomorrow at 12:30. Yeah, try to hoard as much information before you approach a mentor. It's so hard for you guys. You know, we know the vast majority of decent mentors, and we've come across so many that are awful. So many over the last 10, 12 years. So it's really, really tough for you guys to find out who to trust. I suppose the only caveat that we'd have is, obviously this is a session we run completely live through YouTube, but you get a good idea for how we trade, and you know, it costs you $29 to trade with us for a month. And if you like it, carry on. And if you don't like it and we're not suitable for you, then you've lost absolutely nothing. So, and that's really, I mean, we haven't begun to roll it all out yet, but that's pretty much what we're looking to do, and build a nice community of traders that are, you know, more knowledgeable, and you know, we don't want boom and bust type traders. So if you want to make £1 million, which is very, very difficult if you're trading capital, you know, within the next 12 months, then we definitely wouldn't be the option for you. But if you wanted to make consistent returns over a long period of time, then that's what we practice and preach every single day when we trade markets. And I'm sure there'll be a lot to learn along the way. So, and you know, be mindful, we have been in uncharted waters for the last year and a half. And you could even argue before that with Donald Trump and trade wars between the US and China. Like, the financial system is in a strange place really right now. the rule book's gone out the window, and now we are kind of stalking markets and just looking to just attack at various different points, and being patient during market conditions like we're currently seeing here. Try to be patient during this period. It's not nice, it's not easy, but it's a good example of, it's really tough trying to trade inside consolidation. So little things like that might help. I understand your desire to acquire information. The problem is, and we've got over 50 hours of content, 4 different trading courses through our membership as well, which you get full access to. And we have a course which is about 18 hours, which is just full of the economics behind these financial markets. So it's more of a degree level course, and that's all available as well for the membership. So it might be an option for you. The Aussie pairs are strengthening today. Suspect the news impact on the Aussie might be good, or am I making the wrong assumptions? You see, this is going into a whole different level of sentiment analysis, because what you can get if you have a major news event like this and you get positive price action in the build up to it, you could have what's called buy the rumor, sell the fact. So you can have the Aussie increasing in price, and then when the statement comes out, you can see a reversal. So you just want to be mindful of these events, which basically means if you want to buy the Aussie dollar, get into it between now and this news event, but don't carry it going into this news event. You can always get back in after the fact. So if you're buying it now and it's a positive news event and the market reacts positively, then hopefully you'll have made money, and then you'll be able to get into it again after the news event once you kind of know where you stand. And avoid buying it now on the positive sentiment going into this news event, and then seeing sort of negative price action and wondering why and scratching your head. Try not to get into that very easy situation it is to get into. So look, good luck with that. I'm going to have to let you guys go. No, not necessarily. So if you're seeing some positive price action, you can absolutely look to go with it. Like I said, just avoid going into the RBA rate statement. It's one of the biggest news events for a currency. So avoid holding it in, going into that session. That's what we would expect. So you had non-farm payroll on the 7th spot on, so I'm trying to understand trading the news better. We just want to be on side with it. We just want to know why markets are moving the way that they're moving and look to be in tune with that. So so feel free to join us. Absolutely my pleasure, JJ. I hope we've helped. Some great questions and comments and everything there, so thanks very much as always for that. So I'm going to leave you with a little bit of sort of caution over today's trading conditions. Not fantastic. You might find 1 or 2 opportunities. They're few and far between, and we'll have the market sort of revert back to normal tomorrow. So we're probably going to pack up ourselves within the next hour or so. So we'll have a light trading day today, and we're just not going to be too aggressive really, and see where the liquidity is tomorrow. So listen, on that note, guys, thank you as always for joining us. Thanks for those comments, and we'll see you again tomorrow at 12:30. From everyone here at the Live Trade Room, take care, and we'll speak to you soon. Bye for now.